Hello and welcome. I'm Siinom. Welcome to another video by Elliott Wave by Shay. So today we are going to look at a couple of charts which include the dollar index, which is the symbol is DXY. We're going to look at silver, gold, as well as natural gas. So you can see that a rally on the dollar index, because this is the dollar index right here, as you can see this DXY on the 4-hourly time frame. A rally has been going on now for quite a while, and the proof of that was when we crossed this price right here, which is 100.993 USDs. You can see we ended our decline, which began, by the way, at 106.126, following wave E of wave B, which was a triangle, that is to say. So we declined in 5 waves, and then as you can see right there, our 5th wave ended up as an ending diagonal, which is having these 2 blue lines right here. Okay, now before we move on too fast, there's something we wanted to dispute. Remember, our mentor, which is Shane, has masters in Elliott Wave, so he wanted me to dispute this part of like this wave count. If you actually counted this move from it, like the top, which is labeled A right here, as a bigger ending diagonal, well, you are wrong. Here is why I will show you just now. If you look here, you see instead of this being wave A, you say this is wave 4. Why will you be wrong? This will be wave 1, right? This decline, and then wave 2, and then wave 3, and then wave 4, and then wave 5. It does make sense to a certain extent, but it's wrong given that wave 2, well, didn't take the high of what is possibly wave 1. You think you're right, but no. Here's why our mentor said that I should dispute this part. You know that according to the book by Proctor, which was released in 2022, to say the 12th edition, it does say that in a contracting diagonal, whether it's an ending or it's a leading, wave 4 can never be bigger than wave 2. In this case, that's what we saw. This is wave 1, wave 2, wave 3, wave 4, and then wave 5, according to many people. But if you happen to measure this move from there to there, and then take that measurement and project it from the beginning of wave 2 till its end, what you will find is that we actually have a possible wave 4 that is bigger than what is our wave 2, and that's wrong. Instead, there is another way of actually counting this move right here. Instead of a bigger ending diagonal, that is to say, we have a flat wave 4. What is the meaning of what I just said? Well, look at it this way. If you look from there, that is from wave 5 of wave 3 up there, you saw kind of like a complex structure, but not really complex. If you went down into lower time frames, you'd be able to prove that, okay, that's an A leg of a flat right here, right? And then you look at this decline right here, you can see it's in 3 waves, whether it's a WXY or an ABC, but though it does look kind of like a WXY, because if you look at this leg right here, it resembles a WXY structure. So that's a WX and then a Y leg right here, which is wave B. Look at mostly this part right here, which is our point of interest before we move like too far and too fast. Look here, from this low right here, we saw like the market right opened there, this bar, and then pushed higher, and then went down again, and then closed right about there. What happened after that? We opened here, and then this bar pushed higher, and then what happened? It pushed lower to close right about there, and then there was a gap up, which is right about there, and then we pushed higher. What does it look like to me? Well, 5 waves. Look at it this way. This is the low, right? And then that's wave 1. This bar, that's wave 2, and then that's wave 3 right there. So this price gap is all part of wave 4, and then that's wave 5 to complete our wave C. So in short, we had a running flat. Why is it a running flat? Because if you look here, this is where our flat actually began. That's wave E, and then a W, X, and then a Y wave B, and then 5 waves to the upside to complete our wave 4. Hence, we have our wave 4. So now taking you back to what I just said about an ending diagonal, having to have, or it's, let's say it's more of a must have, you know, for our wave 4 to be smaller than our wave 2. You know, let's measure here what is our wave 2 right there, and then project that measurement from the low of, you know, our wave 1, that is where our wave 1 ended, towards where our wave 2 ended. You will see that what you projected from, you know, like the beginning of wave 4 up to its end actually ends, you know, halfway. That is, it does not completely retrace our wave 2 right there, which is now, this is acceptable in this case. So we had our wave 5 as an ending diagonal in the DXY. So you can see right now we're still headed higher, which is our wave 1, 2, and then we're expecting our wave 3 right about there. Why are we still expecting our wave 3? Look at this price area, or this move right here following NFP last week. I mean, there was a lot of volatility. In fact, if you check the volume, you will find that we kind of like peaked, or well, TVC doesn't allow us to check the volume on the 4-hourly time frame. So what about, you know, the daily outlook of the DXY? Well, let me show you right now. Just as I have told you, we had a decline in the form of five waves from 106.126 to form our wave 1 to the downside. So we saw this rally right here, which is still ongoing, by the way. I believe that's wave A of an ABC wave 2. So what is happening right now is that no matter how much we advance to the upside, we cannot take out this price area right here, which is the invalidation level for this move to the upside at the moment. Of course, we are approaching the 0.618 retracement by wave 2 of wave 1. We can have a deeper retracement given that this is wave 2, but I still think that we're still in wave A, and we'll see a decline probably by the end of next week to form wave B, and then again an advance to the upside to complete wave 2. So I think that is what we are currently expecting here at Eliott Wave by Shay. So moving on next to the gold, because I know it's one of the things I mentioned that I will actually check on. So on gold, by the way, we have two possible wave counts that are in play. I have actually highlighted them well here, I believe this side. You see, first of all, what you will notice is that on what we post on our Telegram channel as well as Facebook is kind of like a bit different in terms of wave decrease. We're doing this here for this video to avoid actually running out of wave decrease upon our count. So as you can read here, I've taken gold, you know, 1 degree up, and in certain instances 2, so that we won't run, you know, out of the numbering system. But if you look here from this rally, you know, which is like on the 26th of August, somewhere there, we're still actually in the third wave, which is 1, 2, and then we're still in the third wave, because you can see that's wave 1 right there, and then that's wave 2, and we're still in the third of a third within the 5th wave to the upside. But this one will just solely focus on the intraday update. You can see that we have wave 1, wave 2, and then we had 1, 2, 3, and then 4, and then 5. So basically we have completed wave 3. We might be in wave 4 according to this view right here, because you can see this move hasn't broken above this high right here. It's actually in what we call a box range. So as long as we move in between these, you know, like these two lines, which is this one as well as this one right here, we are probably in wave 4. But should we break above next week, though I doubt, hence I have the second arrow here which highlights that that's possibly our wave 4, because you know wave 4 has a great tendency to move sideways. So this is just our alternate wave count. Our primary wave count, however, is this one right here. It suggests that our wave 4 has completed, and now we have also completed wave 1 and wave 2 to the downside. Now we're expecting to shoot much more higher. You see, much more higher. In fact, this one, you can see that we have taken it, you know, by degree up, so that when we're labeling what is likely our wave 3, we won't run out of the numbering system, just as we have done in the entire analysis right here. But though I doubt this one will play out, given that the DXY is very, very strong, and also what I will show you about silver right now, I believe this is actually what is our secondary wave count. Our primary should be this one that was still in wave 4. We should expect, in fact, a bit of a drop even below this line right here on gold. So moving on then to silver, that I just spoke of, is something that is going to interest you, because if you look at silver, we had our wave 1, of a minute degree, as well as wave 2. So basically we're still in wave 3 of that same degree, following what is likely, our wave 2 here, but it can be wave B, to the upside in this case. But I want to believe that this is wave 2 of minute degree, or degree 10, as some of you might know it. So if you look here, we had our wave 1, and then I have what I believe is wave A, and then we saw last week during NFP what was likely our wave B. So for those of you who understand the concept of liquidity, I believe our impulsive rally last week, it is kind of like corrective by them. We was just seeking liquidity because, well, there are people who had their stops, people who shorted during this move here. So they had their stops thinking that, well, the market will continue to move to the downside. So wave B of a flat has a great tendency though to do this phenomenon. Why do I believe this is a flat instead of an expanding diagonal wave 1 to the further upside? First of all, the DXY is still in a rally. Second of all, what you will find is that on the RSI, we have been creating, lower lows, while here on the market, we have been creating higher highs. So what do I mean by that? This is, of course, the third of a third within this impulsive decline. So that's when we saw momentum peak,